Why does Ethereum have such a hard time? Why is the price continuously going down? Does it have something to do with the technology? Is that outdated? Does it have something to do with investor demand? Who's actually selling here? Let's have a look at the details, and maybe there is an opportunity in this crisis. Now here's something many people ignore. This is the Ethereum ETF. And since the middle of February, we tend to see outflows pretty much every day. In other words, Wall Street is offloading Ethereum. Now, before there was an Ethereum ETF, there was just a grayscale Bitcoin trust. So that existed for Bitcoin. It also existed for Ethereum. And it seems like the selling pressure comes from that because the trust got converted into an ETF. And yes, the holdings are declining over time. But that's not the entire story, because here are all the ETFs. So this is now the Ethereum ETF holdings measured in ETH. And if we remove grayscale from this chart, we still tend to see a declining balance in the last 2 months. But even that is an incomplete picture, because the crisis has not started with the ETF. The crisis developed much earlier when Ethereum moved from proof of work to proof of stake. That's this point over here. So this is now Ethereum's performance relative to Bitcoin. And while the so-called merge created a downwards trend that then accelerated at the end of 2024 even more. Now Ethereum underperformed Bitcoin since the merge by 77%. But Ethereum clearly doesn't have a value of 0, right? So at some point there is a fair price. Where might that fair price be? Historically, the bear market turned around exactly at the point where we are currently at. So this is the Ethereum dominance, or how much of the entire cryptocurrency market cap is in Ethereum. And this tends to top out at around 22%, and it tends to bottom out at around 7%. This is where we are right now. So in the past, we saw the reversal at the end of 2019, and then Ethereum outperformed the rest of crypto by more than 200%. There's also the idea of capital flows within crypto. So let's say people are very scared, then most investors just buy Bitcoin. When then risk appetite increases, more people buy Ethereum. When it increases even more, people buy the very risky altcoins. But because of those flows, it seems like there are constant trading ranges across those asset classes. Or maybe the better term is segments within the crypto asset class. What we see over here is the Ethereum dominance relative to the others' dominance. Now, Ethereum dominance, we've already talked about this, right? How much of all of crypto is in ETH. Others' dominance means how much of the cryptocurrency's market cap is in the altcoins that are not in the top 10. So when this is very low, a lot of money is in the altcoins. When this is very high, a lot of money is in Ethereum. And again, Ethereum is very cheap historically speaking. Ethereum might outperform the altcoins by more than 100% in the next months. Or have a look at this chart. This is more common. This is just Ethereum relative to Bitcoin. We are not yet at the absolute bottom. We could potentially fall another 15%, but the potential risk versus reward again is very much in favor of Ethereum. Maybe we're going to see something similar to what happened with BNB relative to Bitcoin. So an initial adoption phase, and then we tend to trade in tandem. This could happen for Ethereum as well. And then again, if we are now establishing a sideways trading range, we are very low on that range. Because here's the thing. Ethereum is still very relevant within crypto. So what we see here in blue is how much of decentralized finance is currently in Ethereum. So we're looking at all the different blockchains. We've got Solana in purple, we've got the Binance Smart Chain in pink, and we've got Tron in red. And yes, while Ethereum becomes less relevant over time, it's still very, very large. It probably is not justified that only 7% of total value locked within crypto is Ethereum. Again, because half of the total value locked in DeFi is on ETH. There was also the scare that people might be unstaking their Ethereum, thus freeing up Ethereum supply, thus depressing the price. And while the staking isn't growing that much anymore compared to the past, at least we don't see this graph going down. In other words, the Ethereum that's staked is likely going to stay staked. There is a case to be made that the merge, right, the move from proof of work to proof of stake was a mistake for Ethereum. The price, of course, underperformed and the tokenomics aren't really that much better than Bitcoin's. Because here's why people buy Bitcoin. Bitcoin doesn't have a lot of inflation and it has a very predictable supply. That's not necessarily true for Ethereum because Ethereum can change its tokenomics. And so the inflation of Bitcoin and Ethereum is pretty much equal right now. It's close to 0.7, 0.8% per annum. And the Ethereum supply grows more the less it is used. So when the merge was announced, there was still more usage of Ethereum. And so supply actually shrunk while the Bitcoin supply grew. But now both Bitcoins and Ethereum supply grow at similar rates. And that's because the ETH chain itself isn't used that much anymore. It's mainly the layer 2s on top of Ethereum that are now used. Now here are the number of active Ethereum addresses over time. This is a very long-term chart starting in 2015. We can clearly see that while the growth has halted in the last few years, the chain is far from being dead. Transaction fees are currently rather cheap, and that's true despite the transaction count not necessarily going down that much. I believe that's mainly due to the complexity of the transactions coming down. So when gas prices went up, that was mainly because of NFT and DeFi transactions. When it's just about trading tokens directly, then the gas that's needed per transaction is much lower. So we can fit in more transactions into the same bandwidth. Because of that, not much Ethereum is getting burned. And again, that shows itself in a rising Ethereum supply over time. Since beginning of the year, the market has clearly cooled off. There is less trading activity, and that's not exclusive to Ethereum. We can also see this on Solana. So on the left side, we see the decentralized exchange trading volume measured in billions. And of course, this tends to contract. On the right side, we see the market share of Ethereum and layer 2s versus Solana. Now, there was a huge Solana dominance a few weeks ago because of the Pump.fun ecosystem, but that ecosystem is now shrinking. A lot of people have lost money with Memecoin trading. And so now we are somewhat at an equilibrium. It appears as if Ethereum within crypto is currently very cheap, but that doesn't mean that crypto prices as a whole are very low. I think it's likely that the altcoins will go down in US dollars and so will Bitcoin and potentially Ethereum as well. But Ethereum might lose less than the rest. This is again the others dominance. So how much of all of crypto is currently in the altcoins that are not in the top 10? And this long-term adoption trend has now been broken. It seems like from here it's just going south. The altcoins are really in a hard spot. At the same time, we see how Bitcoin in its long-term trading range still has more potential risk than reward. So since we currently trend downwards and since we could easily fall below 50K from here, I think it is wise to not necessarily buy too many bottoms. Relative valuation trades are fine, but just buying Ethereum plain out without any macro hedging, I think is a mistake. Have a look at this. This is the net unrealized profit and loss for Bitcoin. Again, a very long-term chart starting in 2010. And we want to buy whenever this blue line is in the green area. So when the market has capitulated, when the average Bitcoin investor is not in profit anymore. But currently, the average investor is still 47% in profit. So that's the net unrealized profit and loss. Now, why is this so important? It's important because everybody sees the current price relative to the price that we bought an asset for, right? If we are currently in profit, we might consider taking some of that profit. If we are in losses and we believe in the asset long term, we just continue holding. So when the market in aggregate is in losses, that's a sign that the selling pressure might subside. And so that's why we want to buy during crises like this, which only happen every 3 to 4 years. Right now, we are not yet in crisis mode. Right now, I do believe it's more likely that we're going to revisit the cheap prices, the 40, 50K in Bitcoin again, than that we are suddenly doubling or tripling in the Bitcoin price. Yes, Ethereum is already historically depressed and probably the selling pressure will subside here as well. But if the market as a whole goes down by 20%, Ethereum could go down by 10% and still the dominance is going up. Relatively speaking, within crypto, I think Ethereum is a good bet right now. But is it a good bet versus the US dollar? that's very unclear. Since Bitcoin hit 100K, I am betting on falling prices, especially falling prices of altcoins. And what we see here on the right, those are trades made by the premium members of this community. So if you time it right, if you use the correct leverage, if you use the right altcoins to short, then there is still a lot of money to be made during times like this. Most people just stay away, but I think during bear markets, we actually have better opportunities than during bull markets because most altcoins underperform Bitcoin most of the time. And right now, I think it is again a time where most altcoins are likely going to do rather poorly. Many people are too scared to bet on falling prices because there's the risk of liquidation. We need to have proper risk management in place. We also need to know what kind of platforms to use and what kind of altcoins to short that are likely not going to get squeezed. But because of that, I've created a lot of tutorials around that topic. There's more than 100 tutorial videos in total as part of the premium membership. So feel free to check it out. It's currently $125 per month. I've also reduced the monthly rate because now we're in a bear market. A lot of people got burned. If you decide to sign up yearly, you get an even cheaper rate and you also get included a 1-hour call with me. So if you want to discuss your crypto portfolio or your setup in general across asset classes and you want to know my thoughts about this, the yearly subscription might be your choice. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube or see you in premium. Cheers.